Yes, just give a few minutes and then we'll basically start. So welcome everybody. This is actually going to be a very interesting day, and most likely due to the fact that market is, or volatility in the market, it is down. We're going to look at the VIX, and usually a VIX is a very good indicator whether or not the market is going to rally or the market is going to go down. I haven't added the VIX to my videos ever, so I'm going to add that in the future to my videos, as it is a very good indicator of when the market is going to rally and the market is basically going to climb. Otherwise, cryptocurrencies have rallied yet again, and mainly due to the fact that Elon Musk, he is resembling Donald Trump when it comes to Twitter. He basically tweets out and the market rallies, or he tweets out and the market basically crashes. It is actually unbelievable that it's legal, but apparently he is doing it, and he'll probably run into major problems sooner or later, because he is actually creating a lot of havoc in the market. People are actually losing quite a lot of money due to his tweets. But some of the cryptocurrencies that have been doing really well is Dogecoin, for example. He tweeted out last night that he was going to look into Dogecoin or probably find a solution, and he's getting rid of Bitcoin. So Bitcoin fell and Dogecoin just rallied significantly. Otherwise, we can look at the economic calendar, and we can see that the most important news will be out in roughly half an hour, and that is core retail sales. So the entire week has been a massive focus on inflation. Like, that is the worst thing in the world. Of course, there's going to be inflation. The world economy, the world was basically shut down for the last year, and of course that was the normal way of doing business in the world, and getting raw materials and so on, that was disrupted, and now everything is opening again. Now there is a shortage of, for example, raw materials and so on, and that will take some time in order to get those factories going again and so on. It's not something that's going to last for a significant amount of time. And the inflation is not due to the fact that we have been printing money. That takes a long time in order to see that inflation. It's probably going to take another 2 or 3 years in order for us to see that kind of inflation due to increase in money supply. That doesn't happen overnight at all. But due to shortages and so on, yes, that can happen. And of course, it affects the cost of production, because raw materials cost more now because everybody's fighting amongst getting these raw materials, and that will of course also affect consumers most likely. But we'll see that how much it has affected retail sales and so on. So my guess, not that very much, because people have received stimulus and so on. They do have money to spend. So that is out in 24 minutes, and expect the previous was 8.4, and the expected forecast now is 0.7. Is that right? That's a very high number. Expected is at least 0.7, and below usually is a negative for US dollar. Above is very positive, bullish for the US dollar. So we can go and look at. We'll start looking at the VIX first. So The big movers in the market, at least before the US session opens, most of them are in crypto. For example, Etoro is up 7.8%. We have, for example, EOS is up 11.4%, and so on. Dogecoin is not on this list here, but it is also up, I think it was 25% at the most earlier this morning. But I started looking at VIX because VIX measures the volatility in the market. And for people that are just tuning in, this is mainly the setup that I use. And if it looks like a lot of finger painting, then I'll go through it very fast. So down here we have the RSI. That is basically indicates oversold and overbought conditions, and also momentum, whether or not momentum is to the downside or momentum is to the upside. Then we have the stochastic here, indicating also momentum and also buying and selling conditions, whether or not these lines cross. Then we have the MACD here, also indicating momentum and also when the trend is basically going to change, indicating when these lines cross to the downside, it is a bearish momentum. Crossing to the upside, similar to here, is a bullish momentum. So here we have volume, it's basically sell or basically the volume in the market. Then we have the black lines here. These are the Bollinger Bands. Then we have the 50 moving average, or now the 200 moving average up here, the blue line, and the red line here is the 50 moving average. And here we have the 9 and 26 moving average. And the reason why I have this is because of the cloud, and the crossing of these two moving averages is an indication of a buying or selling signal. And then, of course, we do have the cloud, and when we are trending underneath the cloud, it is in bearish momentum. When trending above the cloud, we're basically in bullish momentum. So, we have seen the last week or last 3 days, the VIX spike significantly. Yesterday, it fell as well significantly, and today we are falling yet again. So, usually there's a negative correlation between the VIX and stocks, for example. When VIX, for example, increases, then stocks indices, they tend to fall. US dollar tends to appreciate, and when the VIX starts falling again, it is bullish for indices, stocks, and negative for the US dollar. So that is basically what we are seeing here. People were paying attention to the VIX. Stocks fell significantly in this period, the last 3 trading days. A lot of bad news. Technically, yeah, it was too much news. If you just talk about inflation, and basically start scaring people, then people, of course, will also start selling. But I've said it many times, it is, I would say, nearly impossible for the market to completely collapse at this current stage. One of the main reasons is that the US government is spending a lot of money, fiscal policy, which is bullish for the market. You add money to the market, give people jobs, and so on and so on. They create jobs, and that is bullish short term and also probably long term for the market. And then you have the Fed creating monetary policy, and they're just pumping liquidity into the market. Interest rates are historically low, and so on. And if the market is to completely tumble in a period where you have both fiscal policy, expansionary fiscal policy, and expansionary monetary policy, then there's nothing else people can do. Then you just have to let the market crash. There's nothing else the Fed technically can do in order to help the market. So you will have these times when the market will basically falls, but a crash in this period when Fed is basically doing everything it can, and also the US government, that is quite a difficult pill to swallow. If they were to stop with their monetary and fiscal policies, then yes, that could actually occur. That could happen, but that is not the case at the moment. So we can see that the VIX headed towards the top here, which is a 200 moving average, and found a major resistance right here. And this has been occurring several times in the VIX. We can see it also here. This was basically in March when we also fell quite drastically in the market. And if we go back, then we can see all the major moves to the downside. For example, in in the indices, in the Nasdaq, S&P 500, and also the Dow Jones. We had one in March, we had one in November, we had in September. This one was horrible. Remember this day, it's probably one of the worst days, trading days I've ever had, was basically here. Didn't pay that much attention to VIX, I should have. It shot up to the air and the market just absolutely tumbled. I think it lost 10 to 12% in just 1 week, the Nasdaq. But if you go all the way back to, for example, November, March, April last year, this is what it looked like when people started selling. So panic hit the market, and the market lost roughly 35% in nearly, well, 3 to 4 weeks. So roughly a month, it lost that amount of value, and that's the biggest fall in the market technically in history. It doesn't lose value that fast. We have seen some big falls, for example, in September last year. Also in November was a fairly big fall, but nothing compared to this. We can go back to history, and nothing really resembles this move to the downside. Usually recessions, they last for 2 years. So they top, and then it takes 2 years in order to hit the bottom. That happened in, for example, dot-com bubble. That happened in the Great Recession. Started actually in 2007. It topped the stock market, and it bottomed in basically 2009, give or take, around that area. So it takes a long time. This was completely selling off in the market. So if you look at the VIX, where the trend is, then we can make a line right here, and it is fairly clear that the VIX is still in a downtrend. So it's a gradual downtrend, but it is still a downtrend. So overall markets will continue rising as long as the VIX is in this channel. If the VIX completely changes course and starts trending upwards, then yes, then we will see stocks decreasing over a long period of time. But as you can see, we are still in this channel, and we're just in the middle of things. At the moment, we are most likely going to head towards the bottom of the Bollinger Band here, which is at 1789. That is most likely where we're heading to. If you look at technical indicators, we can see the MACD is turning around here. It's still bullish after this massive run. Usually it is a lagging indicator, so it lags the stochastic and also the RSI. But it is turning around, and most likely will cross the signal line within the next 2 trading days, and then we'll come back in negative territory. Stochastic has already crossed and is heading into negative territory. RSI is also very bearish indeed. So it looks like we are just going to see something similar to this move, heading towards the bottom of the Bollinger Band before increasing again. So it goes up and goes down, and sometimes it goes way up and then way down. But if we look at some of the other indices, we can see that that's not the indices. This is the index here. We can see the futures, and that is the more important thing. We can see the Nasdaq, and the Nasdaq is starting to recover. So what happened here is that we had a selling signal right here. We had the 9 moving average crossing the 26 moving average in the cloud, and that's an indication that it is a selling indication. So we hit basically the bottom of the cloud. Didn't go underneath, indicating that we are not going to change from a bullish trend, which we have been basically since this was basically in 23rd of March last year. We have been trending upwards ever since. We've been basically over here above the cloud ever since, and we have not really trended underneath. We have broken underneath, but not really trended underneath the cloud for any period of time at this point. Yet again, it looks like this was basically the bottom. Was expected to drop towards the 200 moving average. I'm not saying that it won't do that, but at this point it is very overstretched. You got way outside of the Bollinger Band here, and we also got very overstretched, for example, in most of the indicators, especially the RSI was very low for the Nasdaq. But we can estimate where we'll run into resistance. So first of all, we need to look at previous resistance levels, and this was a major resistance level that we actually broke this week, which is roughly around this area here. You can see how often we basically tested this area. We broke through it here and then had this really nice rally a few weeks ago. This was basically in the beginning of April. We had a rally in April, and then we hit the top, and then we broke below this line again. If we manage to break above this line, then there's a very good chance that we go to 14,000. So this is a line that is most likely going to be problematic for the Nasdaq to get through. We have rallied quite a bit from the bottom, roughly 2%. Taking into English, otherwise, we can see the stochastic has crossed the signal line, is heading into bullish territory, so that's a very good sign. The RSI is turning around, and that's also a very good sign. We're at the 42 at this current stage, still very low, and the MACD is very bearish. It's still in negative territory, but it looks like it is also becoming flat, and that's an indication that we'll most likely go and head towards the upside again. But looking at the VIX, fall here, increase in the VIX, fall in the VIX, increase in the Nasdaq, for example. So there's going to be a lot of choppiness, definitely, but the market is set to rally today, and probably the data that is going to be released is also going to be very bullish for the Nasdaq. Then we have the 50 moving average right here. That's also going to be a resistant area, so that's at 13,411, which is going to be quite a big test for the Nasdaq to get through. If you look at, for example, Fibonacci Retracements over here, we see that the 38.2 is right here. That is where we found resistance in the past. See it right over here, and so on. So that is the 13,347. That should be an area where we are going to test. Then we have the 50 right here. That is a 13,480. And then we have the 61.8 right here at the 13,640. And that's probably as far as this market will go in the first run. So we did see something similar when we broke down in February. We did break down, rallied up towards this area, and then broke down again, and then rallied. So we created a head and shoulder pattern here, and actually broke the shoulder around this area, and then headed towards the upside. So distance from the shoulder to the bottom is usually the distance that we are going to rally. So we may see this rally up, break down yet again, probably go a little bit lower, and then continue to the upside if we create a head and shoulder pattern. We can also look at the trend line that held really nicely. So we can see it right here. So we see that bottom here, make a line on between those, and then you can see that we basically hit exactly that line and then bounced from that line. And usually that is a very bullish indication. You can see that we rallied up towards the 61.8 Fibonacci retracement, pull back, not all the way to the line, but then continued to the upside. So here rallied, and here we most likely will just continue with this rally. So that it is difficult for the market to drop substantially when both governments and the Fed or central banks are basically pumping money into the market. That is the tools that they have, and they are made to work. If they don't work anymore, then the system technically can collapse. So the very top of the Nasdaq is around this area here, and that is give or take around 14,000. So that is going to be the target. Break above here, then we're looking at 15,000, 16,000, and way beyond that. So we're just continuing in this trend. We did see very similar patterns here. This was basically in September last year and November, and this was basically in this was in February, March, and we're just continuing seeing these drops to the downside. Of course, everything is reopening, and there's going to be disruption, there's going to be higher inflation because shortages and so on, but market is still in an uptrend until Jerome Powell goes out and says that they're going to change monetary policy, that they're starting to increase interest rates, which will not happen now. It will happen, if it announced it today, it will happen probably half a year from now. And if they stop purchasing or quantitative easing, that of course will have major implications. We did see that back in, I think it's 2018, when the market fell substantially. So we can look at the S&P 500 is right here. So very similar to S&P 500, we if you look at technical indicators, we have a crossing here of the stochastic indicating bullish momentum. The RSI is also bullish, very low, so a lot of room to the upside. We are running into resistance right here. We did not have a selling signal, not really a selling signal compared to the Nasdaq. So compared to the Nasdaq, because the Nasdaq had a crossing of the 9 moving average and the 26 moving average, which is usually a selling signal. We did have a buying signal right here when they crossed, and we have been rallying since. We did fall towards the 50 moving average here, and we bounced from the 50 moving average. So it is still in the same pattern. So the bad news of inflation kind of scared this market, but it is still holding. There's no we're still in this upper trend line, and until we basically break the 200 moving average, we're not going to see this market crash anytime soon, and we're very far away from that. MACD is still very bearish at this current stage. We can look at, for example, also weekly trends. We can see that we're still trending. We hit the 9 moving average in the weekly trend and bounce from that, and we may see this retest if we have a crossing here of the MACD, but at this current stage we are just continuing in the same pattern as we have done the last year. Yes, then we can look at the DAX. So DAX and the Footsie were really strong yesterday. I thought this was going to fall apart. It fell towards minus 2% in just a few minutes, and went way below the 50 moving average. And at that point I thought that we were going to see a trend reversal, or it will drop towards the 200 moving average. But it changed direction all of a sudden, and today we are rallying in the DAX. We do have a selling signal right here. So this was in the 4th of May, where we had a crossing of the 9 and the 26 moving average. Then we broke above, so even though we have a crossing here, it doesn't really mean that we are going to collapse. We did rally after that, broke down, and now we're rallying yet again. So at this point, if we manage to take out 15,500, give or take, then we're most likely looking at 16,000 and beyond that. So this move here, or this candlestick here, is very bullish, and 50 moving average is kind of the bottom of this market. Looking at technical indicators, we can see that the MACD is right underneath the signal line. It will, if this lasts, will most likely cross the signal line within the next 2 or 3 trading days. Stochastic is very bullish, and the RSI is also very bullish, and this trend is still holding. We're above the clouds, and we're most likely going to have a crossing of the 9 and the 26 moving average in the next few trading days. So DAX is definitely very bullish at this point. So let's look at the UK Footsie, and very similar here. It fell all the way down to the very bottom here of the 50 moving average and the bottom of the Bollinger Band, and then rallied. So now we're trading just above the 26 moving average, and we never really had a selling signal here. They crossed or just are level at each other, but they didn't really cross. So at this point, it was I don't know what you basically call this. This was a shock to the market, but buyers were definitely ready to buy at the 50 moving average, which has been major support in the past. We see it right here. We also see it over here. We have occasionally this was due to Brexit. No, that was not due to Brexit. We had definitely here was due to Brexit, and then it rallied after Brexit. So the period when you had the discussions between meetings between the European Union and British government, that was very bearish for this market. But after that, it has continued to rally, and this has been a market that has been not recovered. Very few of the indices are not recovered yet from the major crash here. So expectations is that we will definitely get back to these previous highs of 7,615. That was the high before the crash. It did go higher than that. We were back in 2018. It reached roughly 7,886. So this is kind of the target. After we get here, we'll probably see a fairly big pullback, as we have seen for the Dow Jones. We've seen it for the Nasdaq. We've seen it for the S&P 500. All of them have basically pulled back when we reached this the top of the range before we crashed. But there's a long way to go, and we are gradually grinding our way to those levels. So yes, we can go and look at China 50, because that one is also very interesting, because it has finally woken up. So we have broken the 50 moving average. I've been waiting for whether or not it breaks to the downside, it breaks to the upside, but still it's fairly early to say whether or not this is going to rally. I need another green candlestick clear of the 50 moving average in order to say whether or not this is going to hold, because we did a breakdown below the 200 moving average, one here and also one here, and then we rallied, and this could have been seen as a breakdown, but it didn't happen. This can also be seen as a rally, but if we break down tomorrow or next trading session, then we'll just continue trending sideways again. But technical indicators, they do favor bullish momentum. So we have the MACD crossing the signal line here, that is bullish. We have the stochastic crossing here, that is also bullish, and we also have the RSI here, that is also bullish. So that is a fairly good sign that we may see another green candlestick clear of the 50 moving average. So we can look at the currencies, or cryptocurrencies. I think we'll go and look at crypto. That is, so we'll look at Bitcoin. So Bitcoin is up. So we did hit rock bottom here at the bottom of the Bollinger Band, and yes, we are trading at 50k at this current stage. So yes, this market looks like it's going to recover. It's probably not going to be as bullish, or it has not been as bullish as in most of the other cryptocurrencies. My thoughts on it is that people are trading the coins that I think are going to make them millionaires, and Bitcoin is probably not going to do that at the moment, due to the fact that it is at 50k. If you're looking at an increase of 10x or 20x, this is not the cryptocurrency that you're supposed to look at. If you have enormous amount of wealth for institutions, they probably are interested in buying into this, because it can double within time. That is possible. Go to 100k, then you'll double your money, but you're not tenfold your money in a short period of time. That is not going to happen in this market. But in other markets, for example, Ethereum, which is becoming really popular, or Dogecoin, or Cardano or something like that, that is still possible to double your money, or 5-10x your money if the trend continues, which it looks like it's going to do. As long as the hype for this market continues, then we'll probably see the cryptocurrency market increase. Not a fan of this market whatsoever, but I just do technical analysis of this market, and I'll tell people what basically I see. But you can just look at volume. For example, volume here compared to volume there, it is, people are kind of tuning out for cryptocurrencies when you compare what volume was here and what volume was basically here. So everybody was basically talking about this, everybody was buying into this, and since then we have basically just kind of trended sideways, and volume has kind of declined. So I wouldn't be surprised if we saw this go lower while other cryptocurrency went higher, due to the fact that interest in this is kind of dwindling, and Elon Musk did not do Bitcoin any favors yesterday. There is, so at this point it has found resistance down here at the bullish band, roughly at 50k. That was kind of also expected. It is trading inside of the cloud, and that is a never ever good trade to basically buy something or sell something when it's inside the cloud, because it can be in a downtrend, it can be an uptrend, and it's impossible basically to say at this current stage. Yes. So we have economic details here. Yeah, yes, it fell. So -8. So not really good. That was a horrible number for retail sales. Yes, absolutely horrible number. So this should be really bearish for the US dollar. That should be fairly bullish for example for oil. So we can see that oil is up 1% today, or WTI is up, and the most commodities are actually very high up. Oil, gold is also up here, and silver is also up. So yes, we can see that the US dollar, you have foreign exchange here. You can see that the US dollar is starting to depreciate. We have the index right here. So it's down 0.39%. So it should be fairly bullish for stocks and indices. And yes, it'll be interesting basically to see what happens when the market opens in basically 1 hour. Yeah. So we can go and look at Etoro. So Etoro has started to rally yet again. We're up at 3,990, and it hit support at the 9 moving average. So a little bit underneath the 9 moving average we hit. So we're still in an uptrend, and the buying signal for Etoro was all the way down here. So this was the 17th of March in 2001, whereas the buying signal for Etoro, and since then it has actually more than doubled its value. So it went from 1600 or 1650 up to roughly 4,000 in this period. So as long as these two lines don't cross each other, then there is still going to be this upward trend. So this is also a cryptocurrency that is very popular, and that people think it's going to go much higher. If you look at technical indicators, we can see that we are oversold in Etoro. It has in period gone all the way up to 95, and that usually is the threshold for most cryptocurrency. When they get up to 93, 95, they tend to fall quite aggressively, 20-25%, sometimes 40% if they're lesser known cryptocurrencies. This one also fell quite drastically, but if Elon Musk probably hadn't put out the tweet yesterday, then this probably would have continued falling towards lower levels, probably lose 25% of its value. But at the moment, it is still bearish. If we manage to take out the previous highs here of 4,375, then we may see this go all the way up to roughly 5,000. So we can go and look at Dash. Was also another one that was rallying, and another one's here. Tron is up, and lesser known Litecoin is Polkadot. Litecoin is right here. So Litecoin is up 7%, so not that. It usually has a grind to the upside and then it completely takes off. So it has a period of consolidation where it doesn't really move that much. 50 moving average, red line here, has been major support for this cryptocurrency. Every single time we have gotten close to the 50 moving average, it has rallied quite aggressively. You can see it right here, also here, the massive move to the upside. And we can go all the way back to when this started. The 50 has basically been the bottom of this market. So we're far away from the 50 moving average. So I wouldn't be surprised if we saw this turnaround, because this got very overstretched, and usually when it gets really overstretched, it has to pull back towards the 50 moving average. So that's around at 246 or 250 would probably be where we'll find major support in this market. If you look at technical indicators, we can see that MACD is crossing the 60 line, so that is bearish. The stochastic is bearish, and the RSI is flat at this current stage. So we can look at, for example, some of the shares. So what happened yesterday was that most of the growth stocks, they got really, or they have been absolutely trashed in 2021. So growth stock, for example, Tesla, Neon, and Zoom, and stay-at-home stocks, as Kramer's usually call them, they got really hammered. Netflix as well, but some of them are getting so low that they're becoming really interesting to look at. For example, Alibaba is getting just trashed, and it's getting to levels where it's becoming really cheap. It's an enormous company that has enormous potential. So yes, so I did buy into Alibaba, so just people know that I did buy into that. But Tesla is another one. I do not own any Tesla stocks, but Tesla was just ridiculously overvalued. It has lost 40%, nearly 40% of its value. It is hitting a place where it is most likely going to rally. For example, we hit it right here. This was based on the beginning of March, and now we're hitting the same bottom yet again. So we could see a double bottom here before rallying to the upside. We're also approaching the 200 moving average. And the big warning here is that the 200 moving average has been breached, and we've closed underneath the 200 moving average. So I know that if you look at the Tesla for pre-market, it's up 2.23%. So that's trading at 585. That should be right above the 200 moving average. So when the market opens now in 1 hour, if it holds, then Tesla stocks will be above the 200 moving average. Not underneath. If it was not underneath, then it would be a massive warning sign. But it's also getting very oversold. You see the RSI is getting into territory where it's oversold, and we are also approaching major support levels. So I wouldn't be surprised if this rally, compared if you look at the pre-market, then yes, it is definitely rallying. So if we can also see the Bollinger Band here, we're way outside of the Bollinger Band. So stochastic is turning around, it's becoming bearish. MACD is still in negative territory, and it's very still. There was a selling signal right here, and we're still far apart. So this could rally up towards the 50 moving average, the average value is 673, before we find major resistance. So 50 moving average usually is an area where we found resistance in most stocks. So if you look at, for example, Alibaba, so you can see how far we fell yesterday. It was ridiculous. So most of this fall has been due to, for example, political interventions by the Chinese government. And then they did not hit their earnings expectations, and maybe due to the fact that they were fined several billions, and if they didn't get fined, then they would have reached their their target, but that is the case with Alibaba. So it did break as well as these previous lows, but it just got completely oversold yesterday. So this is a stock I do own, and I did buy more yesterday. And we got all the way down to 25 in the RSI, and we also see that the stochastic here is very negative, and the MACD is also negative, and we can see that the Bollinger Band is way below the bottom of the Bollinger Band, and this is just not feasible to be here for this period of time. It needs to basically go back at least towards the middle of the Bollinger Band. So we'll probably rally up towards 221 before we'll find major resistance. Break above that, and over the door to the 50 moving average up at 230. But if you look at the pre-market for Alibaba, you can see it right here. It is up 1.9%. So it's trading in pre-market at 210, which is fairly good. So you can see how far that is up. That is give or take around here. So still underneath the middle of the Bollinger Band, just at the previous lows here, but I would expect this to rally at least towards the middle of the Bollinger Band before continuing lower if it continues lower. So it is almost getting to levels where we saw in the lower part of the coronavirus in March last year. So it was all the way down here at 171, and there's no reason for this company to be that low. It is one of the cheapest stocks out there when considering even looking at the PE ratio. Compare this to other tech stocks. This is really cheap. So this, I think it is at, we have Alibaba's finances, we have PE ratios, here is 24. Compared to Amazon, which also is up in pre-market, Amazon's PE ratio is at 60. So compare those, both similar platforms, similar companies. This one is way more expensive when comparing to, for example, Alibaba. So, anybody have any questions? I hadn't noticed that.
Is that Is that better? Kind of needed to fix the mic here, so I didn't know that the mic was that bad. We can look at the Dow Jones. We have the Dow Jones indices. We have futures right here, and the Dow is right here. So Dow ran into resistance at the 26 moving average, give or take here. We'll probably have a pullback. If you look at the technical indicators, we can see that they are turning around. So the Dow was really strong yesterday, and usually it tends to pull back before rallying, but still it's just more of the same. It's pulling back towards the 50 moving average and then continue rallying, and yes, it is just more of the same. Yes, so I think I will end it here, and hope everybody has a very good weekend, and I'll try to fix my mic to the next time. So good luck and thank you very much.